Hello viewers, in this video I'll be going over the S&P 500 or ETF ticker symbol SPY. Currently the SPY today we are up points or 47 basis points, and I do believe we may be heading higher, even though as we check on the 1-hour chart, the 1-hour RSI is overbought, as well as the 4-hour RSI, it is also overbought. And when we check the daily chart, the RSI is nearing overbought levels. So I do believe we have a strong level that we just broke out of, and we now have that as support. That support dates back to of last year, January 29th, and that is now support past resistance, which is now support. And the next resistance is where we made the highs of last year. That highs dated back to September 21st. And from there to now, that price movement is only about 1.8% up. So that is definitely doable. And the reason why I do believe we are heading higher is on this next module. In this module, I will be comparing the current trend with this trend. So these two charts, I'll point out why they are both similar. So let's start off comparing them. What we have here is we have an upward channel in the beginning of the trend, and we have an instance where it dipped below the middle Bollinger Band. These three lines that you see here are Bollinger Bands. It's a tool used to measure price level and volatility. So after breaking below the middle Bollinger Band, we have it spike up at the upper Bollinger Band. And after spiking at that price level, we see it finding support in the middle Bollinger Band. And then once more, we break out, touching the upper Bollinger Band. This is the current trend. And now this trend dates back to October 1st to July 3rd, 2012. So let's start with the beginning of the trend. We have an upward trend, and we have an instance where it made a slight dip below the middle Bollinger Band right here. After that, we do see it touching the upper Bollinger Band. And then we do see support on the middle Bollinger Band here as well. And then another instance of touching the upper Bollinger Band right here. So we have 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 identical points. So these charts have identical points. There is a good reason that they tend to have similar outcomes, and that is where we head to here in the projection model. I'll go day by day where this trend headed to. So we are currently at day 0, 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 7 days out, or 6 days out, and 7 days out. So again, the trend that we took a look at was October 1st to July 3rd, 2012, which is right here. And this, back then, the S&P 500 or SPY was only up around 16 basis points. But there's another trend that I took a look at that is somewhat similar. It is up around, or I should say, it dated back to April 16th to January 15th, 2013. And this, or that back then, it was up around 1.7, if I can have it fixed. Yeah, 1.7, roughly fairly close to where the recent high levels is where we are at compared from now to then, is only a distance of 1.8. So that is all. If you enjoy this content, feel free to like, subscribe, and thank you for watching.